Hey everybody, welcome to the crypto chart update for December 28th, 2017, the post-Christmas hangover episode. I say hangover because we have a lot of bearish signals and patterns in the charts today, and we're going to go through all of those. Is this the end of the bubble? Is it time to run and hide? Or are there going to be buying opportunities in the near future? We're going to look at all of that. But first, I'm your host, Tim, a retail investor and journalist, and I am here to look at these charts using technical analysis. I want to give you the tools to analyze charts and make better trades. Set your stops, set your targets, manage your risk, and those are really the keys to good technical trading. If you guys want to check out my more in-depth trade recommendations, you can head over to my blog at tradingview.com under Berlin Trader 591. So on tradingview.com, that's where I post all my trade ideas with more in-depth analysis, more written background on why I'm setting my stops, why I'm setting my targets, and what exactly we should do at those points, at those price points. So check out tradingview.com and check out all my trade recommendations and leave a comment there if you like. Also, guys, this video is brought to you by CryptoKing.org, which is a pretty cool crypto news website just because it's simple, right? It just has the coins, and then it aggregates all the latest important news, and that's run by my friend over at Crypto King. It's a really cool site. Check that out. And furthermore, if you really want to support me, I would really appreciate it, and you can just check out the comment section under the video, the information under the video. That's where I have my donation links and some affiliate links. Guys, if you want to sign up for TradingView charts, or if you want to sign up for a Trezor wallet or order a Ledger wallet, which I both have, by the way, and I use all of these products. So if you want to buy a wallet, go through those links and a little piece comes my way. If this is your first time in cryptos, then you can go to Coinbase. It's easy. I don't really like Coinbase, but it's an easy way for beginners to get started, just to buy some Bitcoin there. And if you go through my link, I get a little cut as well. So guys, please support me by clicking through my affiliate links. And of course, as you all know, this is only for entertainment purposes. These recommendations are not actually for real. They're just for fun, right? Legally, I have to say that. Please contact your financial advisor and make responsible decisions. But without further ado, let's get into the charts and look at this beautiful chart of Bitcoin. Why is it beautiful? Just because we have a great pattern here. Anyone know what it is? Did anyone raise their hand? That's right. We have a shoulder, a head, and a shoulder. That is a head and shoulders, right? So we have the two shoulders on the side and the head in the middle. And traditional head and shoulders has a neckline, which we see by this support area, which is pretty well defined. We had support in December here, support there, support here, and here we are today on December 28th, coming up once again to that support level. Now, as of yet, that support has held, but if that support level breaks, then we will set a new target based on the measured move of the head, which here is about, I don't know, let's eyeball it, 14,000, 20,000. It's about 6,000. So eyeballing that, we should set a new target of around 8,000, which is yeah, quite a ways down from here. Would be another I don't know, 40% decline from where we are now. And we have a lot of interesting levels setting up. Let's check out a longer term time frame. This is the 4-hour chart, by the way, which I really love, because if we look at the 60-minute chart, it's a little too granular, right? There's a little too much information. And if we look at the 1-day chart, to be honest, there's not enough information. It just looks a little messy. So I'm sticking with the 4-hour chart here, because we see a good representation of that head and shoulders. So we had like a mini head and shoulders here, which often happens, is a head and shoulders within a head and shoulders, and that head and shoulders broke and met its target objective, and now we are forming the right shoulder of a bigger head and shoulders. Now what's really interesting about this pattern technically is that it's playing out beautifully right now. We've had this 200-day moving average coming up, right, and we've bounced off of that quite a few times. So this is not the 200 days, it's the 200 4-hour moving average. But as you see, we've bounced off of that back in November, and as well, check it out, back in September was the last time we were underneath of that, and we've followed that moving average up. Right now we're breaking that moving average. We're breaking that moving average support. So we were unable to go back up to the new highs like we used to, right? In the past, we would always come down, make a V reversal, come to new highs, and break out. And that happened a few times this year. But this time, we came down from 20,000 all the way down to 10,000, and we couldn't get back up to those old highs, right? So that shows real weakness. And the fact that we couldn't even make it past this resistance level also shows incredible weakness, right? We weren't able to break out above there. That would have been a different story. But we've basically stopped at this resistance level, and that old support has now become resistance, and now we're in this range where we have this other support level. And if this support level breaks, then that support level also becomes resistance, right? It becomes a barrier with pressure coming down from above, right? And this is this polarization that happens. Support turns into resistance, and resistance turns into support once it's broken. So if we break this moving average, that shows weakness. If we break the support, that shows weakness. Another thing that I have here is this trend line right here, which connects a lot of the price bottoms since September. So we've kind of followed this trend line up. We only broke it really once in November, but we followed this trend line up all the way to today. And if we break this trend line, that's another sign of weakness. So if we break the moving average, the support, and the trend line all at once, that's a confluence of breaks, and that shows a lot of weakness. And we can easily expect a move into this big air pocket. There's not a lot of volume here. We can just break and fall down to 8,000, I think, quite easily. And coincidentally, right, that is the measured move of the head pattern, right? So this is a log scale, so you can't see that it's pretty similar, but it's basically the same. It's 7,000, give or take. And if we break down to that measured move target of the head and shoulders, well, coincidentally, check it out, it's also a support level from back in November, right? It was a resistance here and then a support. And so we extrapolate that level out to here, and lo and behold, that's where the price would get if we measure the head and shoulders. So a confluence of support levels. If we break this support at 13,000, if we break 13,000, that's really it. We're heading back down easily to 8,000. 8,000 is a stronger support level, right? It means we'll have fallen farther, we'll meet our head and shoulders targets, we will hit our support level from November. So I think 8,000 is a good place to buy on that first touch down near 8,000 or 9,000. Maybe on around 9,000, start buying until the 8,000, or even around 10,000 if you're more aggressive. You can buy a little bit, and a little bit, and a little bit, and then when we do bounce back up, you'll be positioned to make some profits. Now the question is, when we bounce off 8,000, are we going to bounce all the way back up to 20,000? I would guess not, just because when we break this big support level, every time we get back up there, it's going to be resistance. Every time we get back up there, it's going to be resistance. So what I'm really looking for, guys, in terms of first quarter 2018 behavior, if we break this support level right here, which could be fun, then we're going to head down to 8,000 quickly. Maybe a couple days, maybe a couple weeks, but I imagine it's going to be fast. And once we reach that 8,000 level, I think first of all, I think any bounces in that area are just going to be smashed down and sold. So if we get down to that 8,000, that's where a lot of people are going to be buying up positions. I think we're going to see a bounce back. Okay, is it going to be strong enough to reach that 13,000 again? I don't know, but Bitcoin is volatile, so I would fully expect a very hard and fast bounce off that 8,000 right back up to that 14,000 level, but I don't think we're going to break out. Honestly, I think we're going to see selling again at that level and push us back down. I think for the first weeks or months of 2018, we're going to be stuck in a range of some kind and could easily develop, for example, into some kind of longer term consolidation triangle. And if that happens, you know, that would actually be quite healthy, right? So we might hear cries of bubble, cries of a pop, Bitcoin down 60% from its highs and things like that. But even if that happens, it's going to be in the context possibly of a triangle. And if that happens, then we're waiting for the breakout in March or April or something to maybe retest those highs once again. And remember, these are all fractal patterns, so the patterns are on smaller scales and bigger scales. So if we get a triangle forming over the next months in that consolidation range, and we break out back up to 18,000, 19,000, then we'll form an even bigger channel, right? An even bigger channel, which could consolidate sideways like this and break out to the upside at some point next year, or maybe in 2 years. Who knows? But you know what? The players are in. Bitcoin has futures attached to it. People are aware of it. So I think we've really passed a threshold this year in terms of awareness. So I don't think Bitcoin is just going to crash down to 1,000 because it's an asset now, and people are going to make bets, right? And support is going to come in. I don't think a bottom's going to fall out after 8,000. If we break 8,000, well, in that case, we have to look back even further to the summer, where we have even a bigger support level around 5,000. So around that 5,000 level would be another big support if we break 8,000. But honestly, I think 8,000 is pretty strong. I think we're going to bounce off that and continue higher. But if Bitcoin sees weakness or some kind of crazy regulation coming in, we could see 5,000. But even if we hit 5,000, I would 100% be a buyer at 5,000, just because the pot odds would dictate a bounce, and 5,000 was such a level for the summer that I think you're going to see buyers coming in there. So that's where I think we're at. I think we're bearish short term, bearish mid-term, and bullish long term. So if you're making long-term plays, you can buy pieces of Bitcoin on the way down and get some Bitcoin on sale. If you're short, if you're mid-term, like a couple months, then you might want to wait a little until we're down near 8,000, 9,000, 10,000. And if you're playing short-term, then you either need to be shorting Bitcoin or getting out of Bitcoin right now and just staying in cash, because right now Bitcoin looks like it's going to crash down to 8,000. So yeah, Bitcoin was my main analysis today because that represents the overall market. This might go along as well with some weakness in the regular stock market. If you look here, I have a picture of the regular stock market here, and actually you see the regular stock market has also been basically mirroring Bitcoin. I think that's one of the most interesting things that not too many people talk about. If you look at the S&P 500, look at the S&P 500 over the last months, and you look at Bitcoin, it's almost like a mirror image. I mean, look at this. Sideways when it's sideways, up when it's up. And the S&P right now is having a little trouble. So I think if the stock market sees a pullback after its amazing run, I think you're going to also see a similar effect in Bitcoin, because I think Bitcoin is really an expression of risk on attitude. If the stock market starts to go over, then I think you're going to see Bitcoin as well go to 8,000. So the stock market as well is showing kind of signs of weakness, and Bitcoin kind of precedes a stock market crash, right? When Bitcoin is showing weakness, it means that the stock market might also fall later, because Bitcoin is really a risk on alpha seeking attitude from the stock market. But let's check out the other cryptocurrencies. Here we have, let's check out Ripple. That's one that's been doing well, surprisingly, as Bitcoin has been crashing, which is pretty cool. It's followed a basic pattern of, let's check out the daily chart. It's followed a basic flag stair-step pattern, which is pretty nice, up and over, up and over, and here we are once again trying to break out of this flag. This is the third breakout. Now remember, breakouts often get smaller and smaller. So the first breakout was 3 large candles. The second breakout was 1 large candle, and now we have 2 small candles on this breakout. We could reach 130, 140, but we could also, if there's weakness in Bitcoin, crash back down. It's really important that we hold this flag support level around 105 to 110 and break out. If we break out on the next candle, that would be really healthy. So Ripple looks good as long as we're above that let's call it 108 level. Ethereum, where's Ethereum here? Ethereum, you know, it to be honest, overall, again, long term, it's in a very big bullish trend, right? And it's really an active coin in the market, and we can see potential for it. Midterm, I think we're just like Bitcoin. We have kind of a head and shoulders here. This is the daily chart. But we have this head and shoulders on a support level. If we break that neckline, then our target would be back down around 540, 550, which would be nicely on this support level. So a pullback from there, we can buy at that 500 level, 520 level. If we bounce off of this neckline and invalidate that head and shoulders and we pop back up, then this would be a nice consolidation pattern. But again, I'm more in the bearish camp. I'm kind of expecting a pullback to those 530 levels. But you know what? I'm in cash. I've sold a lot of my positions, and as a swing trader, you know, I'm in cash because I want to have liquidity ready for a pullback, and I want to buy on that dip, because buying on that dip in cryptos is really difficult because it moves so fast. But when it crashes down to that level, I want to buy in, and we might get a bounce back up to 650, which would be a nice trade. Dash, you know, again, we're looking at the theme of weakness in the market here. Dash has had a huge run up in the since summer, like everything, and since November it just went on a tear. I don't know, 10, not 10, but like 8 times its value, 800% in Dash, which is just nuts. And I really pissed off that I missed half of it because I was on vacation. But yeah, Dash broke out of this blue line, which was the top of the channel, and it's failed that breakout, which is a sign of weakness. I mean, overall, we're in a long-term bullish uptrend, but midterm, I think we're crashing down, back down into that space, empty space here, an air bubble, right? We like to call it, because there's nothing to stop it from falling, and maybe back to that red trend line, back in that channel, which would be perfect because it would fit right in with this with this support level. If we crash back down in that area, I would definitely be a buyer then. Again, that's going to be a couple months out in 2018, but it looks like that's totally possible, along with the crash in Bitcoin and a pullback in Ethereum. Then we have Monero, similar story to Dash, right? We had a huge run up, kind of this blowout up here. It almost reached that trend line here on Kraken. It almost reached it. For all intents and purposes, we can say it reached it just like Dash did, and it would be the same kind of strategy. We have this bottom trend line and top trend line. It's in this channel. It has been for months, and it would be nothing unhealthy. It would be totally healthy if we just came back to that trend line, right, and made another run later next year, right, and continue that trend line up. That would be totally normal, totally healthy. And we have this support level here, and we have the trend line here. We also have the moving average here. So if all of these things kind of confluence, is that a word? Confluence, if they all reach a point together here, we see some confluence of support levels, that would make a nice bounce sometime next year. But right now, midterm, expecting a pullback. Long term, if you're a long-term investor, you could get in now, because sure, next year, 2 years from now, could be higher, right? But midterm, expecting a pullback. Short term, you want to be out of this because it's coming down fast. Litecoin, let's check out Litecoin. Yeah, same story. Litecoin seems actually, to be honest, a little stronger. It's holding its upper trend line. Litecoin broke out of that trend line just like Dash did, but Litecoin is currently retesting that trend line, and if we break that trend line, we're back in the channel, and I would expect the same as Dash, the same as Monero, just waiting for a pullback to that bottom channel and some consolidation, and get in at that point for another run maybe next year. So the theme in the big coins looks like, this year was really crazy. We had huge exponential multipliers on every coin, and a lot of people made a lot of money, and a lot of people came in late. I personally, did okay, but I was trading super small the whole year because I'm a trader, and I know that the most important thing to stay in the game is to trade small. If you trade too big and you make one bad trade, you're out. So until you understand the market, trade small. So I traded small most of the year, and I'm really happy with my performance. Of course, I wish I had made $1 million, but if you trade in small amounts, you're not going to make a lot of money, but you're going to learn. And it's better to learn from small failures than big failures. Let's check out Bitcoin Cash. Is there any difference with Bitcoin Cash? Not really, except that it's maybe more volatile. I love those runs in Bitcoin Cash. Those were pretty fun this year. But right now, again, it looks kind of weak and could easily pull back to 1,700 or who knows, 1,000, right? Just, it looks like it's a bit inflated and looks like it needs to pull back, but not really any obvious pattern like a head and shoulders like in Bitcoin proper. If we go to small cap coins, you might see some crazy movement in the altcoins and outperformance. That might be really cool, and I recommend if you want to stay involved, then put a few bucks into some altcoins and play around with those, because you get some crazy movement and you can learn from mistakes and play with some technical patterns. But right now it looks like all those altcoins that did break out in December are kind of retesting their support levels. Now if they hold the support levels, they could break out, but if they come back into those ranges on weakness, then I think again we're stuck in for a few months of consolidation at the least. In the meantime, it will be very interesting to see if regulations come in, or if any of these shit coins fall apart, or if any of these ICOs get revealed as a scam. It would be interesting to see the reactions. But right now, as it stands, we see similar patterns. All of the altcoins that broke out of their consolidations are now pulling back to support, like Neo here, pulling back to support. And the question is, will it hold and bounce up, or will it break down and crash? And it will be very interesting to see how they react to Bitcoin weakness. OMG, oh my go. I mean, we had a nice consolidation. We were watching that for a long time. We broke out, we hit our targets, and now we're pulling back. So right now there's no reason to be in this if you're a trader. If you're long term on oh my go, sure, take a whack at it. But as a trader, we don't need to be in this because we already hit our targets. Yoda, same thing, right? I mean, we had this huge consolidation. We had a nice run up. I mean, we hit every target possible. There's no reason to be in this right now. And it looks like it's consolidating, and it looks like a flag, right? I mean, it should be a flag and break out to the upside. But if it breaks down, that's a really weak sign, because a breakdown of a pattern that should break out to the upside, but that breaks down, that's a really weak sign. That's like worse than, that's like the worst of the worst, because you're breaking down in a pattern that should be good. So that also looks weak. PivX, something I've talked about and pounded the table for months, and man, that thing finally broke out and finally hit its target. Incredible, right? We were waiting in this $3 space for ages, and it broke out and reached a target of $15. So a 500% increase, not so bad if you waited for it. And yeah, now we're pulling back from the targets, and if we can hold this trend line, then that's a really good sign, and we can continue higher. But if we break back into this range, then we're going to continue maybe increasing but at a lower level. So the themes are, number one, Bitcoin has a head and shoulders pattern that looks like it could break down and take momentum down with it. If that happens, we can see that the larger coins like Ethereum and Litecoin and Dash and Monero, they all exhibit similar patterns where they're at the upper end of their channel, and they could easily, follow that momentum of Bitcoin and come back down into the lower part of their channels. And when that happens, we want to be buyers at those lower channel levels. Then in all of the altcoins, the smaller coins, we see a pattern where they broke out in a big way in the last month, and they are holding their support. And if the altcoins can hold their support and show strength, that might be a really good sign that people are interested in taking risk in this market. But if altcoins collapse and break their support, like here's Vertcoin, for example, we had a nice consolidation. We broke out in December. We held a higher consolidation, and right now either we're going to break higher and it's going to show strength against Bitcoin, or we're going to break down here and see lower levels. Now these are all against the dollar, so it will also be interesting to see how these coins react against Bitcoin. If here's OMI's go against Bitcoin, for example, if it pops up against Bitcoin, then maybe playing the altcoins might be a good way to make more Bitcoin in a market where Bitcoin is crashing. But against the dollar, we might see weakness in all of the coins across the board. So it depends on how you're playing the market. What do you want to do? Do you want to play with dollars? Do you want to play with only Bitcoin? Do you want to take risks and trade small, or do you want to play the bigger coins with bigger size because they're a little more, let's say, a little more dependable? And those are all questions you need to ask yourself when you're trading. So please ask me, send me questions, leave me comments, go to my blog on tradingview.com and write me a message there. I really appreciate your support, guys. It's good to be back. Today was a little long. I apologize, but there's just so much stuff to talk about after the holidays, and now I got to try and lose some weight after eating so much. And I recommend everyone do the same. Hey, hopefully I'll make one more post before the end of the year, but it's been a really great year so far, and I'm really happy of all the people I've met. So until next time, guys, peace.